Hello and welcome. If you happen to have been thumbing your way through Part 2, Volume 154, Number 12 of the Canada Gazette, then you may have heard that there have been new regulations amending certain regulations made under the Proceeds of Crime, Money Laundering, and Terrorist Financing Act. No judgment if not. And no judgment to your compliance officer either if they're making you watch these videos. June 1st, 2021 marks the date when new federal anti-money laundering regulations take effect, which apply to all reporting entities, including real estate brokerages and representatives. And that is precisely what we're going to cover in this series of videos. But before we dive in, it's important to note that these federal rule changes are separate from any provincial anti-money laundering regulations or guidance set by the Real Estate Council of British Columbia, which real estate brokerages and representatives may be required to follow. These videos will only focus on the changes to the federal regulations and obligations under the Act. Another important caveat, while real estate brokerages and representatives are jointly responsible for suspicious transaction and terrorist financing reporting, other federal regulations typically designate the reporting entity or the brokerage as responsible for meeting these obligations. In practice, however, the obligations are often delegated to realtors. And with that in mind, we will refer to you, the realtor, in this video and your role in meeting these obligations. As part of the amendments, the Financial Transactions and Reports Analysis Centre of Canada, or FINTRAC, has introduced changes to certain Know Your Client obligations, including when to verify the identity of persons and entities, business relationship requirements, beneficial ownership requirements, record-keeping requirements, and ongoing monitoring requirements, rules and regulations related to politically exposed persons and heads of international organizations, which are not new but are new to real estate, new definitions, and finally, new money laundering and terrorist financing regulations on the use of virtual currencies. Let's start with the Know Your Client obligations. As of June 1st, 2021, there are changes to certain Know Your Client or KYC obligations under the Proceeds of Crime, Money Laundering, and Terrorist Financing Act, or the Act. The first one relates to when brokerages are required to verify the identity of persons and entities. Again, while the regulations designate that brokerages are responsible for meeting these obligations, in practice, they are typically delegated to realtors. And with that in mind, we'll refer to you, the realtor, in this video and your role in meeting these obligations. The federal rules prior to June 1st, 2021 require you to verify the identity of a person or entity anytime an information record is created, when you're in receipt of funds, verifying the identity of a person at the time of the transaction, and the identity of the corporation or other entity within 30 days. When you receive a large cash transaction or transactions totaling $10,000 or more within a 24-hour period, or there's reason to suspect that a transaction or attempted transaction might be linked to money laundering or terrorist financing activity. In addition, when a transaction involves an unrepresented party, you must take reasonable measures to verify the identity of the unrepresented person or entity. Following June 1st amendments, these rules all still apply. However, you'll also be required to verify an identity when you receive a large virtual currency transaction or transactions totaling $10,000 or more within a 24-hour period. However, there are challenges and regulations regarding the use of virtual currency in real estate transactions in BC, so it's unlikely that you'll encounter them in the near future. We'll talk about that more in a later video. There have also been changes to the rules regarding business relationships. In real estate, a business relationship is any relationship created between a real estate brokerage and a client to conduct a financial transaction, such as the purchase or sale of property or land. Previous regulations stated that a business relationship was formed after two transactions or activities, for which you are required to verify the identity of the individual or confirm the existence of the entity. As of June 1st, 2021, a business relationship is established after one transaction or activity for which you're required to verify the identity of the individual or confirm the existence of the entity. This would also include situations where a transaction or attempted transaction might be linked to suspicious money laundering or terrorist financing activity, as this would require the client's identity to be verified. When a business relationship is formed between a brokerage and a client, you are required to keep certain records of the business relationship, including a description of the intended nature of the business relationship, a record of your business dealings with the client, and any information that could help anticipate the types of transactions that the client might continue to conduct, which can make it easier to identify unusual or suspicious transactions in the future. These records must be maintained until there is no longer a business relationship with the client, which is 5 years after the last activity or transaction that occurred, which required you to verify the client's identity. In the next video, we'll review beneficial ownership requirements, which are new to real estate as of June 1st.